Wednesday, 13th of August. Let's go ahead and get into these markets. Get set up. A second, let me get this set up. All right. Like I said, today is Wednesday, August 13th. Let's get into it. So this is what I seen this morning. When I got to the chart this morning, it's consolidation back and forth between the midpoint. We dropped to the downside using quadrants instead of the daily range to see where those quarter points were. Price dropped to the downside, went back into that same range, and then we got this push to the downside here. So this is off the 1 minute, so let's get in sync with the market and what's going on. So let's focus on higher time frame for right now. So it's transpiring on the hour. Well, we see that we have this consolidation here. So we had this initial push up, and then we had this consolidation back and forth here, which is already Asian range. So I don't need anything when it comes to consolidation, more so on hourly, because I see that the consolidation either where we're at now or inside of this Asian range. And I would prefer the one out of the Asian range because that's the first consolidation after this expansion. So knowing that, let's go 15 minute and just get more in sync on what's going on right now. So we got this push down here. That's sweeping this. So what I want to see on a 15 minute is this create a swing low, and then that'll be the range where we deal in. As you see here, we had this expansion here on a 15 minute, and then we had this push up, and then now we're just in this side of this range. And I would say we're in this range of consolidation here. Right there. So this will be 15 minute consolidation. And there's going to be that swing back up where we can get that push to the downside. And today is recording. We didn't record yesterday. Yesterday was a good stream. Didn't record, but today is definitely recording. Okay. Let's see how price plays inside of this range here. Because you see, even when we had this initial push up, we had push up, retracement, push up, retracement, push up, and then you can look at this like consolidation. And you had a small retracement here. You can look at that like consolidation. But you want to see the consolidation that we're using right now, which will be this one, because we had this push off of it and we're coming back down to it. So if this creates that swing low with the next 15 minute candle, then we can look to push up what we are creating. It should be right here that price can run into. But what we're doing right now is just getting information on where the market is now. And then that way, when we go down to a lower time frame, we just get in sync with everything. So this. waiting to see what the market gives us. Bouncing off of that 15-minute consolidation right now. And since we are there, let's now look at 1 minute. So again, this consolidation right here. This high get taken out here. No. Okay. So I want to see price push up first, and then create a swing high after it pushes up inside of this area. Get a lower time frame dealing range. Sitting around 24,000. And remember, price is, you look at it, you zoom out. This price is bullish. No matter when you're seeing it drop or how it's dropping, it's bullish. Until it starts to just completely flip and you're noticing that you're in bearish price action now, you are still currently in bullish price action. So if you're seeing bearish opportunities, just know you're going against the trend. And that's perfectly fine if you're aware of that. But if you're going against the trend, thinking you're going to get big pushes to the downside, they can happen, yes, because you can catch the turnaround. But for the most part, you want to flow with the market until the market changes. And right now, prices just consolidating after this expansion here. So we're just stuck in a range. We're just waiting for price to decide what it wants to do, even though we know it's coming out of this 15-minute consolidation right now. That doesn't mean that this 15-minute consolidation can hold up. Price can break through it because this 15-minute candle is not closed yet, which will be here. Still got 4 minutes left till that candle closes. So you don't want to jump to conclusion or anything yet. Let the market do what it needs to do. And I hope this chart is a little easier to see. I've been working on the colors and stuff, but I guess a black background is easiest to see. So it should be easier to see during the lives. I'm looking at it now, it looks easier. So yeah, so far so good. Okay, boom. Just like that. I had a student yesterday I was talking to on the phone, and he was asking about bounces off of consolidation. And could you use those as a confluence? Yes, of course. But you need to know, for one, what type of market you're in and where the market is right now. I don't see this 15-minute consolidation holding up. Now, can it hold up? Yes. But we are coming off of these all-time highs and price is starting to pull to the downside. So does price want to be in a continuation to the downside? Well, it's based off what the market structure is giving us. That 15-minute candle is not closed yet. So you trying to take an early bounce off that 15-minute consolidation. Why would you do that if the candle hasn't closed inside of it yet? Yes, you can catch the pull back up, but I'm not trying to catch it when it's trying to do it. Let it show you that that's what it wants to do, and it's going to show you that through price action every single time. So we're just getting a single price. That's all we want right now. So right now we're just watching the 15-minute and the 5-minute. I'll drop down to the 3-minute. And just like I did yesterday, once we got a kind of a footing on what's happening on these time frames, especially the 15-minute, then we can drop down to that 1 minute and then correlate that 5 and 3 to that 1 and then go from there. But you want to have an idea what you're looking for first. Don't drop down to no time frame if you don't know what you're looking for on the 15-minute and above. If you don't have an idea of what you're looking for, or at least a general area, then you're going to be getting caught in back and forth. Something I do not like doing, I even have to catch myself doing it sometimes, is here. I do not like trading, and you guys should know, I do not like trading near this. This is going to be consolidation. So when you're trying to take trades near the midpoint of a dealing range, you always get caught in the wicks and then they're going back and forth, and then you get frustrated because it's like you're hoping it's supposed to take off or go to the downside. But if you're in the middle of a range, then it doesn't know what it wants to do yet. So you rather catch a trade if you're looking to buy in the lower quadrant, or if you're looking to sell in the upper quadrant. That way you avoid the BS in the middle. Now, are there going to be opportunities here? Sometimes, yes. And then you miss them, yeah. So it's case by case. If it's a smaller range, like a 1 minute, then I'm okay with being a little closer to the midpoint. But if it's like a 5 minute, 15 minute, I don't want to be near this. I'd rather be at the lower portion. Okay, good push. 1 minute left until this 15-minute candle closes. We are at the 980s. Just broke below 24,000. And as we see, this consolidation is right below 24,000 even. So we'll see how price plays off of that. Seconds till this candle closes. Look at the last 15 seconds of this candle, how we're getting that rejection off this consolidation. So it's rejecting this area. So once this candle closes, now we can start to see what triggered the rejection. So now that we have this 15-minute candle close inside of this area, we can use, for one, the midpoint of this wick as a confluence. So here and right there. This is going to be titled 15-minute. MP for midpoint. So that's the 15-minute midpoint of that wick, and we just rejected off of it. So now what I want to do is go down 3, and then go to a 1 here. So look at this 3-minute price action, just consolidating, and then you look at this 1 minute right now. If we had to see exactly where we are to the T, then I know right now we are in this range from here to here. Let's see, this low is 977. This low is 977. So these lows are equal lows. So we're in this range here. This range that we're in right now. So does this mean that, oh, I want to take a trade right inside of this range? No, but you seeing where you're at. Look how small that range is, to the point where it's like, is it going to give us an opportunity inside of this range? Probably not, because look how small it is. This is a 22-point range. It was only 11 points for premium. So it means 11 points for discount. So it's not going to go anywhere. Right then and there, I know I need to wait for a better opportunity, because that's too small of a range. And just wait for the better opportunity. Just like that. So now that we got this push up, price is going back into this range. I can leave this range on here right now until price runs away from it, to let me know that we had a range that price ran away from and it's not getting extended. Now I can extend it, depending on how we get this push up. If we get a push up and it doesn't create any imbalance, then we'll steady use that push up. And as it keeps pushing up, we'll use that high. But if we push up and we take out all of this and fall into this CB right here, and we create a swing high inside of that, then I'll be using that high and then this low, which is already going to be this extension. So it's the same range. So what I'm gonna do now is, so right now I want to keep this stuff over here. Because we know where we're at. I guess 15 minutes. And this is where we at right now. And just like that, I'm already set up and prepared for whatever's going to happen. So now when it comes to you looking for your opportunity, I don't have to guess. I just, based off what we just did, I got to the point that now I know where I'm at. I know what's transpiring. I know if price pushes up, what it's going to do and how I can set it up. And if price pushes to the downside, then I know I need to reset, because I know I'm looking at this midpoint of this 15-minute wick now that this body has closed inside of this consolidation. So now what I'm doing, I'm setting myself up for the right opportunity if it presents itself. And this is where the patience comes in, that because you know what to wait for. You're not just guessing on everything. At the price sank from right now, I'm good, because I know what I know what I'm looking for. And if price pushes up right now, I know what I'm looking for. It's all about the setup. You want to get that dopamine hit off your setup, not off just taking wins or losses. Okay. There's that consolidation and that premium. Like I said, you already took out this high, so you can extend this range because we have no imbalance yet after this push up from this low to this high. So in that case, I don't have no smaller range being created. So here, price will be like this. But you want to make sure, this is key, you want to make sure you realize where you had your original consolidation when it first broke. You want to remember that, because you will forget, and then price will take out that high, you extend the range like this, and then you're looking for price to come to a discount and continue back up. If you're looking for that based off the 15-minute, cool. But if you don't realize that price can take out that high and just drop to the downside and come for this low, and you're thrown off, it's like it should have went to discount and kept pushing up. No, because we went and took out this high earlier originally. So when it's coming down, it could be going for this low. So you're setting yourself up for the right opportunities if you look for the right key areas. So now in this case, I know that this was the original. So I'm gonna just label this OG, just so we know for right now. So that's the OG break of this initial range. And that's the new high we just made. And I'm not moving this yet to this high yet, because this hasn't created the swing high yet, even though this candle's about to close. But look at the body. Even though we wicked above it, I'd rather keep this here because the body stopped right at it and then went to the downside. And then what did it fall into? It fell into a discount. But inside of this, on the 1 minute, you don't have nothing to work off of besides just the market structure. That's it. You don't have any more confluences besides the 15-minute consolidation, but you still want more than that. You want the model to appear, but you have this inversion right here, but you don't have any confirmation. So this is where you would go sub 1 minute and then find opportunity, but you don't got to go searching for it. You want a smoother opportunity. And then as you drop down, it should become easier, more obvious. But if you got to keep finding it, no. And then, like I say, this range is only 26 points. So don't let this get you caught up, because let's say it's only 26 points, but you're doing 1 mini and you're back and forth inside of here. Like that 20 something points, even if you're doing half of the range, if it's traveling back and forth. You're losing 10 points here, 5 points there, 8 points there, 10 points there, trying to catch just back and forth. Now you done lost more than the whole range is. There's no purpose. Even though you know where you're at, which is good, you have this, but you want to see something clear. And then like before I had a model, like a range like this, before I used to take the midpoint of the range and have my stop loss at the low or the high, depending on which one I was looking for. And that'd be the trade that I would take. So basically like a breakout. And then that breakout will be a continuation. But with that, a lot of times you can get stopped out when you have a smaller range like this because price is indecisive on where it wants to go. So look at that 15-minute midpoint. So boom. So now we wick this low. So now we're still in the same range. Now what does price want to do inside of this same range? And the most important part is you seeing that this range is actually the range that price is in right now. So it's not random. You're in a key area where price is going back and forth between premium and discount. And then once it breaks out of here, we get expansion, we find a new range. So you want a nice expansion if you're looking for price to continue to the downside, because you're just finding a new range and just follow the trend of whatever price is doing at that moment. And then we got 5 minutes till that candle closes. So now we got this push to the downside. So now that we have this, I'm just watching this. These SIBIs been created, and then once we have that one that gets made, I want to see price break the low of that SIBI, and then that'll be my new range. And I'll show you once it happens. And this is you flowing with the market. Right back into our range. Remember, the same thing I'm doing on the 1 minute, you guys can do 3 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily. It's all the same thing. It's all fractal. It's just the rules change, and you're either a lot looser with your rules or more strict with your rules depending on the time frame. So when I'm going lower, I'm more strict. When I'm going higher time frame, I'm a little bit looser. Okay, so let that play out. I'll make a quick call. Be right back, guys. Let that play out. Yes, sir. Still getting that continuation to the downside. Makes all the sense. So now, price continuing. Yeah, we had nothing to hang our hat on yet. Let's look, 3 minute, 5 minute. Nope. We are in this continuation. So we sit back and wait. But we just had all-time highs. And some people are expecting it to do so much stuff. It's like we're at an area which we never been. So once it gets there and once price decide what they want to do, we just get in sync with it. There's no reason to rush it or make things seem as if we gotta hurry up and do it. Like, no. You set key areas where you want to see like pivot points. You want to see something happen. And then from there, based off what the market gives you, you take it and you use it as confluence and build off of that every single time. Okay. Now we're just waiting. Let me see. Same thing. Yeah, same thing. Check out that high. Push to the downside. Okay. Yes, sir. Alright. So we're back inside of this Asian range on a 15-minute. As you see, there's nothing to the left. So you're only using what you got in front of you. And that's price action here. So we are at this Bitsy right here. But we already know that this push down, this high to this low is going to be our 15-minute daily range. Because this is the expansion to the downside. Question is price going to fill this imbalance? Or is price going to push or create this imbalance, push up, make a swing high here, and then continue to the downside? And just be stuck in a range between here. But you wait and see. Let's see. So that's that 1 minute. Actually take that off now. Because we know we came from this range. Taking out this low here so we can take this off now. Because we're waiting for a new range to participate in. The first range that we can likely have that I'm looking at will be if price went up here and made a swing high here. And that'll give me a nice distance. And then from there, see how price plays out. That is 35 points. So, and then see if is that gonna give us continuation to the downside? Because the Asian range low is right here. 35 points. So let's see how that plays out. We have 7 minutes to this candle close. We are in the 960s. Bounce between 940s and 960s, so 20-point range. And as you see, 24,000 even will be here. So let's go 24,000 here. So right there, 24,000. Keep that on 1 minute. Oh, fuck. Okay. just keep us aware that that is 24,000. Scoot this over. New day. All right. So I do see as we came into this SIBI right here in this 5 minute. But we need a whole other 5 minute candle to close to create a range. But we need a swing high and a swing low. So if price stayed inside of this range, then we would have well, stays inside of this candle, then we have a range. But really waiting on that 1 minute to show us something, just because of the fact that we're not that far away from this Asian range low. If it wants to go down there, but if it does break above this SIBI, we can look to push up back toward the 24,000 and play around with that area before it probably decides to want to go back down. Because you do have this back and forth here, but even though you have this 15-minute consolidation, you look, and whenever you're looking at consolidation like that, you want to see where it came from. So for me, I see this. You could even say there. So I can see price coming back to basically the 980s, sitting inside of the 980s, and then potentially dropping to the downside to go take out Asian range low. And you want to get good at counter striking, not counter trend trading. It's a difference. Counter striking is with trading. How I look at it is, if you're getting hit, you got to know how to get hit back, or how to reverse the hit almost. So how to reverse your thoughts when you're looking for something, or you have a general idea of something, you want to change it. You got to know how to flip the script, but also keep the same objective. And what I mean by that is just stand in sync. Because if you say, oh, I want to stay bullish, I want to stay bearish, depending on how the market plays out, that could play on your mindset. But if you say, I want to stay in sync, now you're giving yourself the best chance. 3 minutes left till this candle closes. Yep, it's definitely a 5 minute. Let's see if the 5 minute gives us that small, tiny range. It's not going to do anything when it comes to like making a big difference of having that range. It's just knowing that you're inside of a range and price is done pretty much expanding, and now we're starting to settle inside of something before it does something else. That's all you're trying to find out. But if price breaks this low or this high and this continues, then you know that it's not done with this expansion as of yet. Let me keep this. And so you see how I have to the right, I have this 1 minute consolidation on my 15-minute chart. You don't want that. You want to keep your chart clean as possible. So you want 1 minute on the 1 minute. Something so simple as that can throw you off by so much if you're getting caught up in price action moving real fast. Like right now it's cool, but when you start marking it up and you got stuff overlapping, stuff that's not supposed to be there, it's gonna throw you off. Look at the 60-minute real fast. Keep that on there. Like I said this morning, I was referring to this consolidation inside of the Asian range, and I was saying that I didn't have to mark up necessarily the consolidation inside of the Asian range because they're already inside of Asian range. So I'm already knowing that that's going to be consolidation, a key area which we can bounce off of or we can sit inside of. So I didn't have to mark it up. But if you look at it, you see you have this bullish push up, and then as soon as there's a bullish, what do you start to get? It's consolidation, back forth, back forth, back forth. And then even with higher time frame consolidation, it could be a couple candles like this. And then you have that right there. So if you looked at that on the 1 minute, just to give you reference, boom, we're bouncing right off of that to the upside. So when you know what to look for, nothing throws you off. You just gotta look for the right things, the right tools. Using the right tools, I mean. So we label this hourly. We'll keep this on the hour. Well, we keep it on this time frame. I need to hide it, I'll hide it. Let's actually make this a higher time frame one. Let's make it white. Just so we can know the difference. Okay, and back to a 15-minute. And as you see, you have that hourly. 15-minute is above. You have this bouncing off of it. So we're pretty much in a range between this hourly consolidation and this 15-minute consolidation already. But you want market structure also to tell you that. So that 5-minute candle did not close lower, closed above. And now waiting for this next 5-minute candle to create this range. Now look at all that back and forth. This is where people get chopped up at. They're trying to chase something like this. And like even with this range, from high to low, when did this range start? So we started with this push up and then this push down. And then if I drag this push over, you got that low. So this low, this body is not lower than that low. So our range will be from that high to this low. Right? And then you have midpoint, which is right there, smack in the middle. And look what price is doing. Back forth, back forth, back forth. And inside of a 25-point range. And that's where you get chopped up at because you're trying to trade in this small range. I'm looking for a range that's also tied to imbalance. That way I can get a nice size expansion, a nice size range, and I can deal with that. But when you're getting a range where prices are going nowhere and you're just trying to make something out of nothing, you don't need to. There's no reason to force anything. You just wait for the right opportunities. What they say, good things come to those who wait. That's especially true in the market. That's 100% true. Not even good things, great things, wonderful things happen because you remain patient. Okay, nice push to the downside. Where's 24,000? What is Asia range? Asia range is 920s. And as you see right now, we're inside of Asia range. So your mindset right now is either are we going below Asia range? Are we going to tap it and then keep going down? Are we going to stay inside of it and go to the upside? Are we going to consolidate in it the rest of the day? Or are we going to push back up towards 24,000? You only have a couple things that can happen. So if you're able to get in sync or allow yourself to get in sync, you're able to see based off what you're seeing what could transpire. Now you can rule some things off based off what you're just seeing with the market and the order flow. So we got this push up. Let's see. This 3-minute candle has just printed. Boom. Hey. So now if we look at the 1 minute, we have this push to the downside. And just watch. Even though we have this consolidation here, this is somewhere price has to get above. Here, we have to get above it, come back down it, and then continue back up. So now that's something price has to break through, which is this consolidation on the 1 minute. But you have to see if you're looking for a higher time frame directional bias. Like if you were looking at the 15 minute and you've seen the 15 minute was looking to be bullish, then that means that you also want to see this broken. So you can either wait for this to be broken to give you more of a concrete trade. That doesn't mean that it can break above it. It's going to stay above it. It can break above it and go right back below it because it's the 1 minute. So your main focus is, okay, what can transpire through what's happening right now. So what I want to see is we have this low of this should be here. That's what's broken. So price creates that swing high now, then this low to this high will be the range that I'll be looking at and see if it comes back into a discount. Thing with that is there's not enough range to give you anything. The model is trying to be present here. So you have this inversion and then this possible confirmation here that you can take. Just know that if this range does create that, then this is probably going to be in inside of a premium. And then if you're taking that confirmation, that could fail. But look at the risk. That's a thing you want to always put into perspective. Okay, if it's 5-point risk, why not take it? And if it gets stopped out, oh well. Don't try to avoid being stopped out because you're going to take more losses trying to avoid that. Just take good trades, good setups. Three, two. Ooh, by a tad bit. Look at that small confirmation there. Look at that. Ooh, tiny. The thing is 5 points. So the question is, where would you take it to? Well, you need a target. You either have this high or you can take it back to this consolidation, and that can determine your risk. So even back to the consolidation, here's a 1 and 3. But also we have this candle close will create that swing high now. So now if you look at it from that perspective, you have that. Look at where that confirmation is inside of a premium. So then you get spooked out because you're like, dang, price continue to the downside and they can stop me out. Well, see why? Because that confirmation is out of a premium. If price would have been a little bit higher and made that like there, then it would have put it inside of a discount. And you could be more confident in taking it. But trades like that, you got to be able to roll with the punches. Every single time. That'd have been clean if the confirmation was in a premium. Discount, sorry. It's cool risk though. 9 points. remember, if it takes out that high, price can take out that high and you go like, whoop. Is that a 1 to 2? I think it was. Yep. Look at that. So 1 to 2. That's why it's important to know where you're at in the market. Because most people will see that high taken out and they'll want expansion. Yes, that expansion could happen, but look at where you're at. Is price ready for it to expand yet? All them crazy wicks. Price spin, price. Just take off or push to the downside. What do you want to do? Now imagine you seeing it go to 1 or 2 to 1, and then you was holding it because you just hoping and wishing it's gonna continue to go up. Yeah, it could, but look what you got to deal with. So that's why it's important to know where you're at in the market. Stay in sync. So even if things don't look clean, you at least still know where you're at. So when to take profit, when to close, when to break even. This little tiny move. So now, if you didn't break even on something like that, and then it came back and you had to deal with this, now you get frustrated. It's like it's supposed to this, supposed to do that. No, they gave you opportunity, and for one, this is only 27 points and 9-point risk. So it's essentially nothing in comparison to NASDAQ or NQ. So now that has played out, it gave you 2-to-1 opportunity, came back down, hit stop loss. So now what? Do you wait for another opportunity? Do you keep trading? Well, you only had 9-point risk. Let's say you held it, you tried to go to 1 to 3 or 3 to 1 and didn't play out, and now you're stopped out. You're stopped out for 9 points. And you reassess. But it gave you the opportunity. Shoot. Okay, price push down. Let's see how price plays inside of this hourly range. Remember, this is an hour. This is not a 1 minute consolidation. So even if the bodies break out of it, that doesn't matter because this is an hourly confirmation. now we have an even smaller range of this candle closes, but we're looking to get that push back up right inside of the same range. So now look at this giving you. Take that off. Look what you got right here. But you guys see if it plays out. Just 15 minutes. Let's go 5. And then there's that Asian range low. Nine 20s. Okay, there's Asian range low. So now that we're getting expansion off of this, I'm looking at now is this imbalance here, this sweep here, this high here, and then whatever low it bottoms out to. So it'd be like that, or whatever it bottoms out to. As long as we don't get any more imbalance inside of this price leg pushing down. So let it play out first. upside to that, but price can very much break that low and continue down. We're just seeing right where price is at. This is not us looking for anything. This is just you following price. Yeah, nice push. It's decent. Okay, I'm going to extend this range. Remember, this is our original OG break right here that broke structure, and then this is the extension here. Let's see if price goes into a premium and it continues down. This momentum could carry on, but we have still got a long time for the hourly candle. We are in expansion. See, price is not ranging anymore. Ranging will be towards the midpoint. But as price is making a range and then continuing that break, whereas is in expansion right now until price is done. So wait for price to be done, wait for this expansion to be done, wait for price to settle. Once price settles, find you a new dealing range to play off of. And once you find that, you find your way. And then based on what you're looking for, premium sales, discounted buys, and you take it as is. And we'll hit it tomorrow. There may not be a stream Friday. I'm trying to pick between Thursday or Friday, but I'll let you guys know. It's probably gonna be Friday, so we'll probably be back at it tomorrow. But tomorrow will be same time when we start. So I'll see you guys tomorrow.